79 years ago, India won its freedom after a long struggle. Today, we are quietly building towards another kind of freedom. The freedom to build for ourselves and also compete with the world. And if you look around, that change is already happening. There was a time not very long ago when we imported many of the products we used every day. But that is now changing. Today, 1 out of every 4 iPhones sold anywhere in the world is made in India. Our smartphone exports have crossed $29 billion. Today, India exports toys worth over $380 million. India has also rolled out its first Made in India shipping container for global trade. Our defense exports have grown from just 686 crore in FY14 to a record 38,000 crore. And today, nearly 65% of India's defense equipment is made right here at home. We even saw a glimpse of that strength during Operation Sindoor. So this Independence Day, instead of talking about India's journey, let's talk about the companies making this possible. Because behind every product that leaves India for the world, there's an Indian company quietly building world-class products, winning global customers and proving that India can compete with the best. That's exactly what this video is about. Today we look at 5 Indian companies that truly represent one idea: made in India, made for the world. These are companies where a large part of the business and future growth comes from the world choosing what India builds. And for every company, we'll answer 5 simple questions. How did it become a global player? What does the business actually do? What's driving its growth? What's the biggest risk? And finally, is the valuation still worth paying for? So let's start with company number 1, Bajaj Auto. Imagine you're walking down a street in Brazil and a Pulsar rides past you, an Indian motorcycle thousands of kilometers away from home. Bajaj Auto is also the force behind KTM's global manufacturing. KTM is the legendary European brand known for dirt bikes and motocross. In fact, India has become the manufacturing hub for several KTM motorcycles sold around the world. That's how far Bajaj Auto has come. From being known as an Indian two-wheeler company to becoming one of India's biggest automotive export stories. But here's something most investors miss. If you only looked at the Indian market, you might think Bajaj's growth is slowing, because its domestic motorcycle market share slipped from 16.6 to around 15.6% in FY26. But while everyone was focused on India, Bajaj was quietly building one of the country's biggest export businesses. Today, 60% of its business comes from exports across more than 100 countries, with Nigeria remaining one of its largest markets. And the momentum isn't just coming from one market. Latin America has now delivered 11 straight quarters of growth. Asia continues to grow steadily and Brazil has become a major growth engine. The company has also increased its manufacturing capacity there to 60,000 motorcycles a year, and in just 3 years, Bajaj has become one of Brazil's top 5 motorcycle brands. In fact, during Q4 FY26, Bajaj grew at nearly twice the pace of the industry across its top 30 export markets. Now, the management wants to take monthly exports beyond 2.2 lakh units, gain market share from Chinese motorcycle makers, expand further across Latin America, and grow both KTM and Triumph globally. And that strategy is already showing up in the numbers. FY26 was Bajaj Auto's strongest year ever. Revenue crossed 58,000 crore, EBITDA went above 12,000 crore, and profit after tax crossed 9,800 crore. But yes, there are risks too. A large part of Bajaj's business depends on exports. Nigeria is still operating below its historical peak, and currency volatility there remains a key risk. KTM's turnaround also needs to stay on track before it becomes a meaningful contributor to profits. Today, Bajaj Auto has a market cap of around 3.1 lakh crore and it is trading at around 27 times earnings. Now let's move on to company number 2. Imagine a global pharma company launches a new medicine. Its brand is printed on the box, but the chemistry inside that medicine may have been developed and manufactured here in India. That's the role Divi's Laboratories plays. Today, nearly 89% of Divi's revenue comes from exports, with Europe and the US contributing almost 74% of that revenue. Around 55% of its revenue comes from custom synthesis, where it manufactures complex molecules for some of the world's largest pharma companies under long-term partnerships. And that's what makes this business different. It's not competing on price, it's competing on chemistry, quality, and trust. Now let's look at what's driving the next phase of growth. The company has already started supplying the contrast media used in CT scans. Its next opportunity is supplying contrast media used in MRI scans, which is currently going through approvals with global customers. At the same time, it's expanding into peptides, basically the building blocks used in some of the fastest growing treatments for diabetes and obesity. In fact, management's long-term ambition is to become one of the world's largest peptide manufacturers. What's interesting is that a large part of this future hasn't even started contributing to revenue yet. Several of the company's custom synthesis molecules are still moving through phase 2 and phase 3 and regulatory approvals. In simple words, today's business is growing, while another pipeline is quietly getting ready in the background. And even before those opportunities start contributing, FY26 revenue has already crossed 11,000 crore, with management targeting double-digit growth over the long term. But of course, there are risks here as well. Growth doesn't depend only on Divi's execution, it also depends on customer approvals and regulatory timeline. And because exports contribute such a large share of revenue, changes in tariffs also remain an important watch point. Today, Divi's Laboratories has a market cap of around 2.08 lakh crore and trades at roughly 79 times earnings. Now let's move to a company from Ahmedabad that solved a problem for a mine on the other side of the world. Let me tell you the full story. A copper mine in South America was struggling. Ore grades were falling, production was slowing, and the obvious solution was to spend hundreds of millions of dollars on new equipment. Instead, the mine decided to call an Indian company, AIA Engineering. And what AIA did was surprisingly simple. Instead of replacing the entire system, it redesigned the mill lining and introduced a new discharge system. And the result was that the mine's production increased by at least 15%, power consumption fell by 15%, and all of this happened without any additional capital investment. The customer was so impressed that he immediately placed an order for a second mine. That's the business AIA has built. It makes specialized wear parts used in large grinding machines across the mining, cement, and power industries. What started as a manufacturing company in Ahmedabad is now supplying customers across South America, Australia, Africa, and several other global markets. But the real advantage isn't just that it exports, it's what it sells. Management believes there is no other company in the world offering a similar integrated solution, and that's what gives AIA its competitive edge. Today, exports have become the company's biggest growth driver. Nearly 65% of the company's revenue comes from exports. Also, weaker rupee has helped the business because AIA earns in foreign currencies while most of its manufacturing costs are in India, and that is showing up in the numbers. In FY26, revenue reached 4,355 crore, while profit after tax touched a record 1,270 crore. But of course, there are risks too. Mining companies expect products to be available whenever they need them, so AIA has to maintain large inventories across different countries and often wait months to receive payments. That means a significant amount of cash stays locked inside the business as working capital instead of being used elsewhere. Today, AIA Engineering has a market cap of around 42,500 crore and trades at roughly 33 times earnings. Now let's move to the next company that's changing what made in India means around the world. For years, people associated it with low-cost manufacturing. But today, it is becoming a symbol of world-class engineering, and one company leading that change is Bharat Forge. In 2023, Bharat Forge became the first Indian company to export a made-in-India heavy artillery gun system when it shipped the ATAGS to Armenia. It was a big milestone for both the company and India's defense industry. But defense is only one part of the story. Today, nearly 48% of Bharat Forge's revenue comes from exports, with customers spread across North America, Europe, and several other global markets. And the company has evolved far beyond making forged auto components. Today, it manufactures small jet engines for drones, aircraft landing system parts, artillery systems, and armored platforms. Basically, products where engineering and precision matter far more than scale. Aerospace is now one of Bharat Forge's fastest growing businesses, contributing nearly 26% of its non-auto export revenue. The company was also recently chosen by a global aerospace OEM as its first supplier from India for critical aerospace components. And the traditional auto business is also evolving on the side. Management believes the next phase of growth will come from aerospace, defense, and industrial exports. The company already has an executable defense order book of nearly 11,000 crore and expects its Indian manufacturing business to grow by around 25% in FY27. Now, there is another opportunity on the horizon. As Europe increases its defense spending, Bharat Forge sees more opportunities to export its defense products. The numbers are already reflecting this momentum. In FY26, consolidated revenue grew 11% to 16,800 crore, while EBITDA increased 6% to 2,921 crore. But of course, there are risks too. The commercial vehicle business still depends on production cycles in North America, geopolitical developments remain unpredictable, and the restructuring of its European steel business is another key monitorable here. Today, Bharat Forge has a market cap of around 1.04 lakh crore and trades at roughly 92 times earnings. Now let's move to the final company on our list. In just 6 years, this Indian company has quietly doubled its global market share in one of the most important parts of a vehicle, from 4.5% to nearly 9%. We are talking about Sona BLW Precision Forgings Limited, or Sona Comstar. Most people know it as an auto components company, but management wants to build something much bigger: an intelligent mobility technology company. Today, Sona makes precision components like motors, driveline systems, differential gears, and sensors that are used by leading passenger vehicle, commercial vehicle, and EV manufacturers around the world. Its global presence is already significant. In FY26, nearly half of its revenue, which is around 2,180 crore, came from international markets, with exports spread across North America, Europe, and Asia. But the bigger opportunity lies ahead: its EVs. In Q1 FY27, 44% of the company's automotive revenue came from EVs, and even more importantly, 64% of its 24,000 crore order book is linked to EV programs. That gives the company strong visibility for future growth. At the same time, Sona is preparing for what's coming next, and the company wants to expand beyond automobiles into railways, robotics, and physical AI. And to strengthen its EV business even further, Sona recently partnered with Denso, which is the world's second largest auto component company. Together, they'll develop EV motors for both two-wheelers and passenger vehicles. Management also believes these products can eventually be exported to global markets, creating another long-term growth opportunity. And the business is already delivering. In FY26, revenue grew 26% to 4,475 crore, while adjusted profit after tax increased 11% to 670 crore. Now, one interesting takeaway from management was around tariffs. Despite recent global tariff announcements, the company doesn't expect a meaningful impact on exports, as earlier tariff hikes were largely absorbed by importers. But yes, of course, there are risks too. The company now needs to execute well on its large EV order book, and since its top 5 customers contribute around 50% of revenue, customer concentration remains an important monitorable. Today, Sona Comstar has a market cap of around 47,500 crore and trades at roughly 61 times earnings. Now, after looking at all the 5 companies, one thing becomes very clear. India's export story is no longer just about low-cost manufacturing. It's about building world-class products that global companies trust. Whether it's motorcycles in Brazil, life-saving medicines, mining solutions, defense systems, or EV technology, Indian companies are steadily moving up the global value chain. And that's an important trend for investors, because companies that build successful global businesses don't just grow with India's economy, they grow with the world. Now, of course, every company we discussed has its own opportunities and risks, so always do your own research before investing. On that note, wishing everyone a very happy Independence Day. Jai Hind.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.